Hello, Maverick traders. Currency recap time. Joe with you here. It's the 8th of May. It's Thursday and fun day. Let's jump into it. I'm going to break down some meaningful news of the day. Let's take a look at these markets technically, and I've got some trades to share.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's get straight into our market analysis. And I guess we'll just start with the news of the day because it was 100% risk on. Probably more reactionary than anything. So the U.S. markets did close higher today on the session. We had our own FOMC statement yesterday and kind of meandered sideways, but we are still within a technical range that I'm going to show you in a second. I'd say the big news was the UK and the U.S. trade agreement announced today. This came right after the Bank of England cut their rates as expected. Now, Bailey did come out saying, hey, look, I don't expect inflation to stick around too long. But the negotiations between the UK and the US are going, and I really think that just kind of surged everything. In fact, let's take a look at the data, folks, because it was definitely a risk on day. The yen, biggest loser today, just shy of 0.5%. The dollar and the euro both up a little bit. Now, in light of the pound cut, 25 basis points, that was expected, but I do believe that the comments and maybe the idea of a deal with the US and the UK might have kind of stabilized and strengthened that. But outside of that, it was kind of flat. A decent move to the upside in the Aussie, and the Kiwi kind of stayed stable. Now, why I believe it was more of a risk on is because we did see the Aussie go up a little bit. We saw the yen drop, but crypto had a massive surge. And take a look at the bounce in oil today. I looked at that chart, and on a velocity score, folks, the velocity chart on oil looks pretty good. It's just such a specific, commodity based on regulations and announcements. It's just, I kind of left it there. But then again, take a look at the dropping gold. So definitely what you'd expect on a risk on move for today's action. Look at Ethereum, 17%, just shy of that. Litecoin, Bitcoin, all looking really good. So a good push to the upside overall, and very, very traditional when it comes to a risk on move. So what do we got going here? Well, let's take a look at this. I've got this market kind of glass half full. I just like the pattern on it. I'm scoring it above, below the 20 or the 50. It's above both. Obviously, the slopes aren't quite there. The cross isn't quite there, but the chart is looking a little bit stronger. Let's take a couple of minutes to talk about it. So why I've got it scored is we got a nice 20 that's turning up. It's above both averages. I do like how I'm starting to see some of these consolidation or pullback levels increase. So this was a pretty good area of support. We talked about that 5,500 as being a make or break, and it looks like the market's so far comfortably there. However, there is a level here that I truly believe needs to be broken before we can get this whole, okay, we're above some sort of the bearish correction action and we can actually get back into the bull side. But it does have a beautiful ascending triangle pattern going on. Now, what do I mean by it's within a range? And this range is volatile. It's this. It's going to seriously be basically this 5,500. See if I could draw the square with you up to the resistance at 58. I mean, so that is a pretty large range for the S&P. And if you've noticed, we aren't slowly creeping around. This is gap. This is a gap. This is a gap. We're jumping around all over the place. So a move from here to here. So the volatility is secretly built into this. It's reactionary. There's an announcement here. There's an earnings result there. I did the equities yesterday, and one of the biggest losers was the communications sector, but it turns out it was just Google by itself that was carrying the majority of it down because of some sort of a agreement they have with Apple. They might lose their AI a contract with them. So it is this jump, skip, hop all over the place, and it's not getting anywhere. So it's difficult to trade day to day, but if you just kind of keep within this range, you can kind of just, hey, this is the area we're in. Individual trading is rather difficult, and I think it's going to stay that way for a little bit. So what could clear it up? I don't know. Let's take a look at what's going on around the world here. A couple things that I thought were noteworthy was the unemployment rate in the Kiwi. unemployment rate actually dropped a little bit better than expected. And I think that's why it's not fallen apart, even though the Aussie actually has a better chart. It's a little bit stronger. We'll get there in a second. The U.S. Fed fund rate, came in exactly, kept it in line. Powell comes out and says, look, it's too muddled out there. I'm seeing a little bit of weakness in employment, but once again, inflation's kind of stabilizing. All sorts of fun things. That's got its own problems. But the markets did okay overall. In fact, there wasn't much of a reaction yesterday in the U.S. markets at all. So here is the Bank of England. We come out, we have the monetary policy change. They decided to cut by that 25 basis points in line with expectations. A little bit of a push and pull here. But Bailey came out right afterwards and saying that, hey, we don't expect this volatility to stay there. We don't expect the inflation spike to stick around. A little bit later, they're in works with the U.S. to work on policy negotiations. It's all leaning to the good side. It was all met with good things. The pound stayed pretty stable in the U.S. Dollar moved a little bit higher. We did see the unemployment claims on the U.S. Slightly lower than expected. This is going to be a really difficult number to try to digest over the next little bit. Now, we do have the Bank of Canada press conference coming out along with their unemployment change and unemployment rate tomorrow. So we'll see what happens there. And maybe, hey, that could be the next country we're going to make deals with. And that seems to be the idea here, folks, is what deals are going to get done, the reactions to it. You guys know this drill. So let's take a look at our currency analysis and rate things on a volatility system. As always, folks, let's start with the yen. The yen was definitely the weakest today. You can see a little bit of a rollover there. I think it was just, I don't want to chalk it up to anything past just a risk on push, which means risk off gets hurt. A little bit of a rollover. It's continuing kind of a downtrend here on the 4-hour chart. We've seen this a little bit. It is breaking levels. Look at this retest of a level that it broke a little while ago. This is this support area here. We'll see if that kind of bleeds off or if this is kind of a one and done and we're going to see some more stabilization and more of a range. However, pretty easy to score. We're down at the bottom here. We've got a moving average that is sloping lower, and we've got a SAR that's actually, RSI that's actually pushing towards the downside, well below 50. So I'm just going to keep it at a -3, at least with today's action. And then we're just going to move on to the dollar. And you can see the dollar was quite a different story. Now, it had a pretty good surge off the bottom ever since the end of yesterday, and it just kind of continued it. So it's a pretty big move, and it really didn't give it any sort of an advantage because it did come off a lower low here. So it was already down. So we did, a good move on the RSI. That's cool. A flip in the SAR, but this moving average, it's just showing width. I mean, we're going from here to here to here to here, but the overall motion is definitely sideways. So I really didn't want to get too excited about it. I do like the price action breaking above resistance. I'll give that the momentum on the RSI is actually higher and the flip in the SAR, but that moving average is not helping at all. So I had to just go ahead and give it a +2 for where it's at. And it's crazy how hard these push, especially when momentum kicks in from day to day. I don't see that changing. Just be aware of that. Let's get into the franc. The franc is pretty much sideways. It really didn't react to much. It's just within its channel. You can see back and forth here on the RSI, flip-flop on the SARs, and sideways on the moving average. I see it staying kind of neutral. It has been for quite some time. I think if we get a risk on or a risk off that's a little bit more substantial, maybe 2 or 3, 4 days in a row of either, I think the franc might show some strength against those because it's just a little bit more stable. So right now, it's really not going to give me any sort of advantage. Moving over to the euro, it really didn't do as much as the pound, and it is still kind of in this low base area. It did come to a sideways area here on the S&I, flip-flop on the SAR. I will give it a little bit of a negative because of the moving average. It's come down a little bit. It is flatlining here, but it's a little bit glass half empty for me. But flip-flop on the SAR, consolidating RSI, the worst I could hit this with was a -1. To the pound, I thought the pound was going to do a little bit more. Now, in light of having an interest rate cut, it was expected, but cutting 25 basis points to see a little bit more of a push to the upside. And that might have had to do with some of the negotiations or some of the deals being worked out with the U.S., kind of an optimistic surge. Still up percentage-wise, it did pretty good. Got the RSI some momentum above that 50. A little bit of a pullback towards the end of the day, those last couple of hours. That's fine. We'll see. I do like how it broke above the resistance. The SARs are back and forth. The RSI, the moving average isn't giving me much. But I do like kind of the price action and how this RSI, the momentum might be picking up a little bit. And think about this, folks. If a deal's kind of already in the works or it's something you don't have to worry about, it's not like the currency is going to be great. It's just not going to be as tumultuous. So when you have, there's a deal being worked up, it's kind of a breath of fresh air for a minute. And so maybe you might see a little bit of a relief move in those currencies. So I do like the pound. I decided to give it a +1, at least for today. Here's the CAD. We've got their announcements coming up with their unemployment and their employment numbers. We'll see where those go, but pretty much dead sideways here. Sideways here on the RSI, consolidating moving average and just kind of moving well within its range. Look at the high that it put in here a little while ago and the low, and it's just kind of completely sideways. So it's a 0. Let's get to the Aussie. I did like the Aussie, showing a little bit more strength. I would like to have seen more momentum. In the RSI, it sloped a little bit. I saw this kind of emerging, and I like kind of the high base that was going on. I was kind of expecting or looking for, I should say, a move more to the upside. I'm still looking for that. I don't want to beat it down. I'm going to keep it at a 0, but understand that this 0 is at a higher base. I mean, it's a pretty good move, and it's basing. So you could call this a +1 and see if it can kind of gain some strength, especially if risk on is going to continue. Moving over to the Kiwi, similar, but just not as aggressive, I should say. It doesn't have that higher base. This is more of a middle mover. So I dropped the Kiwi a little bit, and here's why. It showed that it was starting to slope a little lower. It dropped a little bit lower here. The RSI is below the 50. You could call it a 0. I imagine this might bleed a little bit more towards this major support. I could be wrong. It could flip-flop with another risk-on move. But right now I had to just move it from a 0 to a -1. Quite the contrary. Let's get to our cryptos. They're all +3s except for basically Litecoin. Just high base breakout, massive surge, big push back into it. Could it be after the policy announcement, or I should say, the Fed, the U.S. and the U.K. kind of reaching a deal? Maybe. It's just a big surge to risk on. Take a look at Bitcoin Cash. Same idea. Very, very volatile. Lots of move. Big surge. High push on the RSI. Lots of momentum. Ethereum was out of control today. What did I say? 17%. It's actually 18% now. It's moving a little higher. So these will push and pull. Litecoin seemed to be a little bit reluctant, but look at that. It even pulled back, and it's pushing above its resistance area. It's still, I gave it a +2, even in light of it, just because the moving average was more of a sideways. But big risk off, or excuse me, risk on move today. That is for sure. So this is what I got for you when it comes to our velocity moves today. Big moves, off of announcements. Keep that in mind. We got the U.S. and the U.K. working something out. Who's next in line, we'll see. But currencies are still going to have to follow the rules based on their policies as well. But I think we're actually going to get this relief rally, this kind of, hey, whenever there's not anything to worry about, we should expect a little bit of a bullish reaction. And this might be the first of many. I don't know. This is kind of where we sit right now. So let's jump out and take a look at a couple possible trades. I'm only going to look at 2, and it's going to be the weakest against risk on, and then, another risk on versus the U.S. I thought it'd be kind of fun. Let's jump out and take a look. So the first one is kind of the U.S. dollar gaining a little bit of strength against one of the risk on currencies that's not doing as well. And I'm picking on it a little bit, thinking, hey, if we're going to see more stabilization going forward and more deals, then maybe the U.S. dollar becomes more stable and becomes stronger. That's great. And then we get a little bit of a flip when it comes to the risk on and maybe money back into the U.S. If that's the case, this might be a pretty decent setup. Now, it's early yet. I like it as kind of a move to the downside. I like this RSI moving lower. If we could get price action to break below that, good flip in the SAR. The moving average isn't really helping us, so I'm going to be patient with this one, but I did like the chart and kind of playing the emergence and the stability of the U.S. dollar moving forward. But this will need a risk-off move. On the other side of the coin, folks, let's take a look at the Aussie yen, because this is going to be the exact opposite. So if risk on continues to be the place to go and the yen continues to slide, I think this might be a really good trade as well. Almost the opposite of what we looked at. This is a kind of an ascending triangle. It's got a basing level. I want to see price action moving above it. I like the RSI on there. Moving average is kind of slight and kind of consolidation, but this is kind of a high base breakout. It's going to take a little bit of time. Those are the 2 on my watch list, and what I thought was fun about both is one is going to trigger based on a move to risk on, and which is this, and then a move back to risk off, which was the Kiwi dollar. So I'm just kind of sitting back, see what triggers first, and going to go follow along and see if I can make a trade or two. Whether or not you want to make a trade, hey, I mean, there's trades out there, but expect to see more tariff news, negotiations, possible deals. I do think you're going to get an initial relief out of the currency. I've seen it in the markets as well, but I don't know if that's going to remain because there's going to be agreements on who gets what and how the tariffs work, and then the strength of currencies will kind of play themselves out. But the markets do remain in a consolidation area. There could be a lot of reactions. We could see a big gap up and a gap down and a move higher that falls apart and still be within this wide area. So it's going to be jumpy and it's going to be very difficult. That doesn't mean that there's not opportunity in the currency side. We just got to identify it. If it triggers, get in. Use our targets, stops. Relative strength and weakness is great, but let's be quick. These aren't going to be those long, wonderful trades that I think you can probably pyramid into. I don't think that's kind of where we're at right now. But proper position sizing as always. And if you want to make a trade, it doesn't have to be a full size either. All right, guys, that's what I got for today. Thanks for joining me, and we'll talk to you next time. Bye, folks.